Hi students, my name is Akshay Kadolkar, and so this lecture for BBA fourth semester on module number 1, which is the amalgamation of companies purchase or absorption. Okay, so I hope all of you saw the last lecture, and I hope all of you understand also that lecture. In last lecture we saw what in by purchase consideration. Okay, so purchase consideration means what? It is the price payable by the transferee company to the transferor company is nothing but what's the purchase consideration. Okay, and the methods of purchase consideration also we saw. There are five methods are there for the purchase consideration: lump sum method, net asset method, net payment method, intrinsic worth method, exchange ratio method. Okay, so like these are the methods are there. So out of these methods we saw the two methods, which is the lump sum methods and the net asset methods. Okay, and the lump sum method means what? So it is the purchase consideration is determined in a fixed sum through the negotiation between the transferor and the transferee company. Okay, so this is the lump sum method. And what in by net asset method? Net asset means what? It is purchase consideration is what's calculated by considering the agreed means what's the fair value of assets and liabilities taken over by the transferee company. It means what's in this net assets method, the assets minus the liabilities. Okay, so but assets should be in the fair values we have to take. If it is not given the fair values, then we have to take what's the book values. But while calculating, there are two three more important things are there. Which are those two more important things? The fictitious assets are not considered. For example, the preliminary expenses, discount on issue of shares, okay, accumulated losses, as well as the capital reserve, share premium, general reserve, debenture redemption reserve, workman's compensation reserve. Okay, so these are the not, these things are not taken under the for calculation of the purchase consideration under the net assets method. Okay, so while taking the assets at that time we have to take the fair value. If it is not given the fair values, then book values we have to take, otherwise fair values we have to take. Okay, so as well as we saw the in the last lecture we saw the problems also on the purchase consideration, how to calculate the purchase consideration under the net assets method, the assets minus the liabilities. Okay, so in this class we will see the net payment method. Okay, so now see what in my net payment method, the agreement between selling company and purchasing company may specify the amount payable to the shareholders of the selling company in the form of cash or shares or debentures in a purchasing company. Okay, so this is the third one purchase consideration method, the net payment method. So it means what's this, the in this method the amount of purchase consideration, so what the amount of purchase consideration is the agreed value of equity shares, preference shares for the debenture, and cash paid by the transferring company to the shareholders of the transferor company. Okay, so it is nothing but the net payment method. It means whatever the agreed purchase consideration is there, so this purchase consideration is payable by the transferee company to the transferor company in the way of cash or shares or the debentures. But in this case, in this net payment method, it means it not include the amount paid to the debenture holders and other liabilities directly paid by the transfer company. It is not the included. Okay, so this is about the net payment method. So now in this slides only given the how to calculate the purchase consideration under the net payment method. Okay, so now the a amount of equity shares. Okay, amount of equity shares means how to calculate the amount of equity shares, number of shares we have to take into issue price we have to take, and take the amount in a inner outer column. Okay, next number b amount of preference shares, number of shares we have to take into issue price we have to take. Okay, if it is multiply you will get the total amount and you have to take in the outer column. Next, amount of debentures, number of debentures into issue price, so you have to calculate like this and take the amount in a outer column. Next, cash paid by dissenting shareholders. Okay, so this is also directly whatever the cash is given, so this cash we have to take the outer column. Okay, so for this net payment methods we will take one example. Okay, so whatever we solved the earlier example, no, with the help of that illustrations we will see the examples for this net payment method also. Okay, so in this, in above illustration, in first, it means what's the first, there where the Sai Limited is there and the Maltesh Limited. Okay, so Sai Limited agrees to take over the business of Maltesh Limited. It means Sai Limited, it is in the transferee company, and Maltesh, it is in the transferor company. Okay, so Sai is a taking to the Maltesh Limited. Okay, and agreed to give 12% preference shares of rupees 10 each, fully paid up at par, and to issue equal number of equity shares of rupees 10 each at a 10% premium, together with cash rupees 2 per equity shares, and to discharge 10% debentures at a premium of 20%. Okay, so it's very easy, it's related to the earlier examples. Okay, it's really whatever we solve the problems related to the purchase considerations under the net assets method, whatever we solve problem, no, in that. Okay, so now see in that problem only. So see here, illustration 1, in the format, see here, equity and liabilities, under that share capital, note number 1. Okay, so 2,80,000 is there. So now this note number 1, share capital 24,000 equity shares are there, and each share price is rupees 10. The total amount is rupees 2,40,000, and next 4,000 10% preference shares of rupees 10 each, rupees 40. Okay, the total share capital is rupees 2,80,000. Okay, so these both the shares we have to take, 24,000 equity shares and 4,000 preference shares. Okay, so in this slides also, as it is, I have taken. So now this share capital, 24,000 equity shares of rupees 10 each, rupees 2,40,000, and 4,000 10% preference shares of rupees 10 each. Okay, so it means what? So Sai Limited takes the business of Maltesh Limited, and for this preference shares, 12% preference shares of rupees 10 each. Okay, so these 12% preference shares of rupees 10 each we have to take for the purchase consideration. So in the next slide, see here, solution, computation of purchase consideration, 10% preference shares of Maltesh Limited, under that, so Sai Limited is taken preference shares of the Maltesh Limited. 12% means what? It is in the dividend rate. Okay, so it is the dividend rate. So 20% 12% preference shares at par. At par means what? Whatever the amount is there for this preference shares. Okay, so see here, B, 4,000 10% preference shares of rupees 10 each. Okay, so 10, it is in the par value. Okay, so this, as it is, we have to take the 10. So 4,000 into 10, it's a 40,000, as it is we have to take. Okay, so now see, so this 12% preference shares of rupees 10 each, fully paid at par, it is finished. Now second one, see, to issue equal number of equity shares of rupees 10 each at 10% premium. It means what's issue fully, it means what, how many equity shares are there? 24,000 equity shares are there. Okay, and rupees 10 plus 10% premium. 10% premium means what? 10% you have to calculate on this rupees 10. Okay, so it will come rupees 1. The 10 rupees plus 1, it will total will be the 11 rupees. Okay, next 10% premium, together with cash rupees 2 per equity shares. Okay, 2 per share. So it means what? So 24,000 equity shares taken by the Sai Limited, by from the Maltesh Limited, at rupees 11 plus 2 rupees cash is also given. Okay, rupees 2 cash is also rupees given, means total rupees 13 rupees. Okay, so now see how to pass this for the purchase consideration. Now see second number, 2 equity shareholders of Maltesh Limited paid cash rupees 2 per shares. Okay, so how many shares are there? 24,000 shares are there, each share price is rupees 2 is given, so total is a 48,000. In that, issued 24,000 equity shares of rupees 10 each at premium of 10%. It means what? So on this 10 rupees is there, so on this 10 rupees you have to calculate the 10%, means rupees 1. That this 10 plus 1 total is what? 11 rupees. Okay, 24,000 into 11, total will be the 2,64,000. Okay, so now to calculate the total purchase considerations, now this 40,000 plus 48,000 plus 2,64,000, total is what, 3,52,000 is the total purchase consideration. So like this you have to calculate the purchase consideration under the what's the net payment method. Okay, I hope you will be the understand. If you not understand, you can contact me, it means what's text me or the directly call me. Okay, thank you.